that up.
It is. It is. I'm like, dude, what are you standing there? What's going on, man?
Look how good that fish looks right there.
Yeah, I'd be just like that fish. I had a bunch of fishing rods next to him. Right?
I just let him know, like, don't mess around, bro. I'll go fishing for you.
Very good, man. Hold on one second. Hey, Kim, can I call you right back? Thank you, man. I appreciate it. All right, brother. What we got, man?
2024 real estate market, Tim. Is it good, bad,
It's awesome.
neutral?
Awesome.
Awesome for who?
Awesome for buyers. Awesome for sellers, man. It's going to be phenomenal.
Okay. it's not, but okay. You want to go ahead?
So we're going to base it on three principles. Ready? Number one, okay, interest rates are going to come down. Okay, as interest rates go down, their buying power is going to increase. So that's number one, right? Number two, a lot of our baby boomers, our senior population is beginning to sell and convert over and move out of the area. So that's going to be the big, huge number two. And then number three, those people that are serious about real estate that understand the fundamental value, how houses appreciate in value based on scarcity, want to win. That's my philosophy right there, man. It's gonna be a win.
Okay. So you think house prices are going to do what?
Need to go up.
Okay, and interest rates are going to go down.
Yeah, I do. Yes, sir. Yes, sir.
So the challenge we have today is buyers' buying power is challenged, and is that going to resolve itself?
So the answer is yes. And the reason for that, Brian, is you have to understand people's payroll, their incomes lag behind appreciation. Okay, so people's payroll, their incomes are going up now, catching up with the interest rates. Okay, interest rates are going to go down, and their pays are going to go up, and the buying power is going to balance out.
I don't think that is. I don't think that the interest rates will come down and incomes will come up enough to do what you just did here with your hands.
Well, I mean, look.
I think it'll go like this. That's assuming it'll go like this. And the reason I say that is houses are the most unaffordable that they've ever been in our lifetime. And that's proven fact. You can look it up. It's based on data. And by unaffordable, what I mean is based on the average American's income versus the average cost of a mortgage, the gap is now farther than it's ever been. And I do agree that it will probably shrink somewhat, but house prices will go up. And I think it'll probably be almost flat for buyers as far as like if you can't afford a house now, I don't think it's going to be miraculously better to afford a house in 2024.
I think the process is going to change because I think people are going to recognize the houses are just not a place to live, but they're a long-term investment and they're a long-term insurance policy to prevent your rents from going up. So
let me just interpret what you're saying really quick. So you're saying that people that are currently choosing not to buy because they are choosing to rent because they feel like houses are unaffordable and that they're waiting for them to become affordable are going to change their mind and say, even though they're unaffordable, I'm going to buy one anyway.
Exactly right. There's no question about it.
Okay.
Now just play it through with me. You ready? You were renting out this townhouse that you've been renting now back in 2019 for $1,500. You're now renting for $2,500. Do you think they regret not having bought in 2019? Yeah.
So I don't disagree with you in principle. I know people personally that are following this tract where they've been waiting out. It's like I look at it a little bit different. I think it's the people that tried to outsmart the market who were very confident that, because their uncle told them or because they just know what they know, that things are going to, like the housing market's going to crash. And when it crashes, I'm going to jump in. And they're starting to realize it's not going to happen. So let's just pause for 1 second and let's speak to that group of people. And let's just say, listen, if you've been on the fence and you've been waiting for a crash, let me tell you why that is not going to happen. The primary reason is because, and we were just talking about this before the call, real estate is a zero-sum game.
Correct.
without new construction. What that means is for every person that sells a house, they're buying a house, and the number of available houses stays the same. So what you have is a pent-up demand. You had like 4 million prior to the pandemic. Now it's like 6 million people who want to buy a house, who can't find one, or would buy a house if they could, or whatever it is. However you want to look at it, the only way to solve it is new construction, more houses for the amount of people. That is not taking place.
Correct.
So therefore, house prices will not come down. The only thing that would cause them to come down would be a shortage of buyers or an abundance of houses for sale that met the 6 million and then had a surplus on top of that.
Correct.
It's not going to happen because everybody who's in a house is going to move into another house. They're going to buy a rental or they're going to buy another house or whatever. So house prices are not coming down.
It's not going to happen with the construction of new homes.
Yeah, that's also true.
We're not building affordable homes. I mean, think about it. I mean, you go
That's
out,
also true.
brand new townhouse at $500,000. I mean, that's affordable.
Just not. You're correct. You're 100% correct. Yeah. So there is not going to be a savior of new construction.
Nope.
It's not even just the prices. It's the fact that, and this, I haven't read this, but my theory is that most of the population centers have been built out, and the building codes that are in place prevent building right near the cities, and the immediate surrounding areas are already built out. Like, you have to go farther and farther away, and the pandemic and working from home helped solve some of that.
Right.
But people that want to live near a city and live out in the burbs, there's not new construction happening around the country, and the construction that is coming is $500,000 and $600,000 houses. Like, you go into the MLS and you go new construction under 400,000, you'll probably find zero.
Right.
In all of Southern Maryland, and probably nothing in PG County. I don't know the last time I saw anything under 400K being built, townhouse or single family, but especially a single family.
So I think you're missing two steps. Ready? Step number one is you've got a lot of more mature, seasoned, older homeowners. They're going to sell because they realize I've got all this built-in equity. I'm ready to retire. You got that group that's going to move out.
But let's just stick with these buyers that are going to come into the market.
Sure.
I agree with you, but I don't know if anything has changed enough to bring them in. In fact, what I think has happened for many people is that the opportunity might have passed them by a little bit. Where
I don't think it has. I think there's going to be even more opportunity for two reasons, Brian. You got a lot of Airbnb. Airbnb is taking a hell of a damn hit, and there's
it's only 1 million houses. It's not a lot.
Hey, 1 million makes a difference. Be surprised. But also, don't forget the conversion of commercial space into residential housing that has started to take off in the city centers. That's starting to happen. And
it is, but it's not enough. It's so few and far between. Like, I read about a guy bought bought something in Ohio. I think it was an old school. Bought 2 schools across from each other. It was in Philadelphia or something. Yeah, and that's happening, but it's not happening at a rate that's going to solve this problem anytime soon. I think that the realistic conclusion is that it's going to be a hard time for buyers to buy houses. Nothing is coming to the rescue. What people are going to have to do is swallow the bullet, bite the bullet, buy a smaller house that costs a burden to buy. And it's going to be hard for buyers. Like, I don't see a scenario in which buyers are going to feel like they're going to be happy at the settlement table. Like, man, I'm so happy this is happening. It just feels like a burden to buy a house all the way around. Now, the place where it doesn't is you have that 2-income household. They're making $250K. They can afford an extra $1,500 a month.
The income went up, as we talked about earlier. The income goes up. It catches up with the price of homes.
Yeah.
Bingo, win-win. What do you always say to me? Winner, winner, chicken dinner. Come on.
Yeah. Yep. So I feel like it'll get a little better for buyers, and I think there's some buyers that were sort of waiting out the market. We're here to tell you it's not coming. If interest rates go down, house prices go up even faster. If interest rates go way down, house prices go way up.
But what
so
does that
it's not going to solve. It's not going away.
But what does it do for somebody who bought a house last year? What's happening to prices?
Well,
Now
now let's talk about sellers, because I think
Yeah.
so for buyers we've already gone there.
Yeah.
And here's let me wrap through a couple predictions that I pulled up on the internet. So I pulled up Redfin, Business Insider, Bankrate.com, and Forbes.com. They all say the same thing.
What's that?
Listings will rise, prices and rates will fall. That's not true. But housing costs will remain a problem for young families, which will increase demand for large rentals and force President Biden to make affordability a cornerstone of his reelection bid. That's probably true. They're probably going to pressure the Fed to lower rates. But the idea that house prices will fall, I disagree with. Listings will rise in prices and rates will fall. I disagree. That's Redfin.
Housing market predictions for 2024. I'm reading it right here, and it basically says, I'm going to conceptualize it, values will continue going up, and that buyers are recognizing the overall investment return.
Yep, they're
on a
changing their
home.
mind. Yep.
Dude, and that change in perspective is huge, Brian.
You're correct, Tim. I mean, I agree with you. I just don't know that it's a ton. So,
I think there's a number of pieces in play. We've got the Airbnb piece, we've got the seniors selling their home piece, we've got affordability catching up with incomes going up. I think it's a change in perspective. I think 24 is going to be a solid year, but remember,
it is.
Baron von Rothschild said, which is you buy when there's blood in the streets. And Brian,
There's no blood in the streets, Tim. There is no blood in the streets.
I think there's opportunity.
There is, but there's no blood in the streets. Like,
well,
there's
I think with a blood in the streets is real simple. It's the real estate agents that aren't sharp, that aren't sticking to the market, that are getting out of the business.
you're talking about from the real estate agent and the lender perspective.
And the lender perspective,
Let the bodies hit the floor, Tim. Like it's a slaughterhouse out there.
Exactly. So what's that mean? It means
that has nothing to do with the people watching this. Well, a lot of realtors actually watch our videos, so I'll say that.
It's going to mean more professional real estate agents that are using funds in place to buy houses. Brian, look, they've got construction perm loans now that are tied into FHA loans.
Well, let's finish up with this predictions from these experts, right? So Business Insider says home buyers will see lower mortgage rates, higher home prices, and a lot more competition. I definitely believe that.
Okay, I mean, look,
2024 buyers should start preparing now by saving money, paying down debt, improving credit, look into affordable mortgage programs and down payment assistance to boost affordability. Check, check, and check. That is all 100% true. You should be calling Tim and saying, hey, I want to buy next year. What do I need to do to get into position? What programs are available? I can tell you there's more than what you probably think.
And that's the key right there, Brian. As things tighten up, we talk about blood in the streets, right? What's going to happen is more affordability, more products. Look, the state of Maryland, if you don't follow the Maryland mortgage program, and I don't want to quote rates here, but look at the Maryland mortgage program. We had a 6.25 government rate the other day, 0 points. Brian,
yeah. Well, there's stuff. That was my whole point. Call Tim. Yeah. Tim will get you into something you probably don't know exists. All right. Bankrate.com says low level of inventory. Sellers continue to have the upper hand in the housing market. True. High mortgage rates and steep home prices are dissuading would-be buyers. Again, true. If rates dip in 2024, it'll spur the market for buyers and sellers. Also true.
There you go, man.
Forbes.com.
Yeah.
Forbes.com says, when will houses become affordable? Without reading it, I'm going to say not in the foreseeable future.
In 10 years.
Hopeful home buyers are getting early holiday gift, a decline in rates. And this is one of those ones where it's like everything's relative. Like it's lower, it's more affordable compared to October, but it slid to 7.2. If you told somebody last year 7.2 is going to be the good rate, or 2 years ago, you'd be like, oh my gosh. Despite this easing perfect storm of high rates, home prices amid historically low housing stock continue to put homeownership out of reach for many. Most notably, first-time home buyers remain pessimistic more than ever about being able to afford a home in 2024. Also, all true. This is all basically what we've been saying the whole time. 2023 was a demoralizing year for many aspiring home buyers. Yes, it was. And it was demoralizing for home sellers because the greed and the ability to sell your house for these crazy prices is gone. So let's talk about sellers really quick and what sellers should expect for 2024. Do you want to give like a summary?
Yeah, I think sellers are going to expect to see that buyers in general are going to be more. I hate to say this, but more picky about the houses that are coming on the market. I think they're going to require more inspections. I think they're not going to accept the house as is condition any longer. They want a home that's going to be worth what they're willing to pay. I think sellers have to be more flexible in paying closing help. I think sellers have to be more realistic about time frames, right? So I think those three things have to come in play, and I think there's going to be more.
That was like 5 things.
Okay, but there's not going to be a seller's like market, right? It's not a buyer's market.
Well, Tim. So let me say first of all, I agree with everything you said 100%. I probably wouldn't even add anything to it. I would also say that that's still a seller's market because ultimately.
Yeah, and still control the inventory. I agree.
Well, not just that, but they're still getting high prices. And at the end of the day,
right.
Like when you sort out your list of goals, getting top dollar is over and above pain in the buttness of having to do inspections and deal with getting your house fixed up or whatever. So they're still winning. And they're still able to demand high prices. Yes, they're going to have to concede some things they didn't have to before, but it will still be relatively easy to sell your house, and they'll still be able to get top dollar. Now, the greed is gone in the sense that you can't do crazy things and say, I'm going to live in my house for 6 months for free. You're going to pay your closing costs and my closing costs. You're going to waive the inspections and the appraisal, and you're going to pay $50K over. That is gone. But that's probably not healthy anyway. So we're in a good situation for sellers, but they're also going to have to now roll up their sleeves a little bit, and they're going to have to put in a little bit of effort here. They're going to have to fix their house up. They're going to have to compete against their neighbors a little bit more, and they're going to have to concede on some things they didn't want to before. I just went through this. My home seller had to put in a UV light for his well because the well test failed, and before we would have been like, no, we're definitely not doing that.
But still, and then they had premium dollar, Brian.
But that's my point, though. We sold it over the appraisal, and things still, like, we still got top dollar for it. And a freaking UV light's only $1,200, not a big deal. So it's like a small percentage. So for sellers, it's not gonna sell with 5 offers. It's not gonna sell in the first weekend per se.
Right.
You're gonna have to be realistic about your price. You're gonna have to put a little effort into getting it to sell, but it'll sell. So I think for sellers, it's good news. For buyers, I don't see it as rosy. I still see it as painful. But I do think that, to your point, Tim, for the people that are willing to say, hey, you know what? Like, I would love for a house to be able to be, 3,500 square foot and 25% of my income. It's going to have to probably be 2,000 square foot and 35% of my income. And it's not going to be like all fixed up, but I have a house. So yes, that's a thing. And you're going to see people buying some more fixer uppers and less desirable homes, but their opportunity exists. If you are able to buy a little bit of a fixer-upper as a first-time home buyer, and you're willing to live in a Rambler that maybe it's got an unfinished basement like I did when I bought my first house, still opportunity is still there. You can still do it.
Correct. And so, Brian, you nailed it right there. How many of us would have gone back 5 years ago having bought a house in 2019? And I'll give you an example. One of my clients bought a townhouse for $150,000. Dude, they put it on the market 30 days ago, and they're selling it for $295,000.
Yeah.
They're almost making 100% profit.
Oh, I know.
And the proceeds are tax-free. Okay?
Yeah.
I don't know what other investment you're going to sell, and they're 100% tax-free, Brian.
Well, to your point, Tim, people are coming around to understand. I'm having this conversation with my son-in-law right now, and I'm trying to explain to him that even though it feels like a crazy decision, you have to compare that to 5 years ago and understand that it feels like a crazy decision compared to 5 years ago when you could see somebody buying a $300,000 house and paying $1,800 a month, and it felt comfortable. It's not going to feel comfortable. It's going to feel like a stressful event, and buyers are gonna have some pain. Which brings me to, I think we covered this now.
Right.
I do want to touch on this. I did a video the other day about this real estate agent situation, and I don't think it's going to affect us very much this year. But I think in the future, we are going to see a doing away with, on a percentage basis, more than 50% of buyers being represented by real estate agents. And I want to say that it's going to feel like maybe somebody's getting a better deal because there's not this like 5 and 6% of the cost being swapped back and forth between everybody, and it's going to feel like, okay, we're sort of getting a better deal. I don't think it's going to ease buyers into buying houses. It's not going to make the closing costs go away for them. It's not going to make buying it easier. In fact, I think what is going to happen is it's going to make buying houses harder. And I think on a percentage basis, more deals will fall apart. To go under contract and go to settlement right now, only 5% of deals fall apart. I think that if we do away with buyer's agents, that number would easily double, if not more. And the reason why is because there's nobody there to set expectations. And if you, in the state of Maryland, you can only represent a buyer or a seller. I can't represent a seller and then say, all right, well, I'm going to represent a buyer and a seller. I can only represent the seller. So if you buy a house with no buyer's agent, what you're doing is you're buying a house unrepresented and you're dealing with the listing agent. The listing agent has a fiduciary responsibility to protect the interest of the seller. Okay. And so now you have a situation where if you're faced with trying to buy a house that's extremely unaffordable to you in your mind, you're not going to be like, well, you know what, I'll just pay 3% to a buyer's agent and let me just pull out some $100 bills and slap them down. Not happening. You're probably going to waive it all together, or you're going to pay some nominal fee. And when it comes time to getting your inspections and you're demanding that the seller fix everything, you have no perspective of like, hey, that's not how it works. Like the most people that are buying a house, they don't get all the windows that have broken window seals. You get that little fog right next to the corner of the window. Sellers don't fix them every time. It's not normal. Like you're going to walk away from this deal now over that, or you're going to say, hey, I want this done, and if you don't, I'm going to cancel the deal. That's going to happen. Or they're going to move in and feel like they got taken advantage of. And it's going to create a lot of friction for everybody involved. It's going to be a lot more of a burden. Just imagine you selling your house now, put your home sale hat on, and now you have an unrepresented buyer who's got very outside of the normal set of expectations about how this is going to work, and you have to deal with that. That's going to create a lot of problems. Now you're not going to pick up the phone and call the buyer's agent and be like, come on, like, get your people online here. We're not doing all this. And they're like, I know. I've been telling them. I was like, all right, well, tell them this and tell them this. And they're like, okay, but would you please tell the seller if they just fix this, we'll be okay. That's how we do it today. That's going to go away. You're going to have these people that are pounding on the table. Well, I want all 57 items fixed. Otherwise, I'm not buying this house. Or they're going to end up like getting, another one is the finance side. They're going to come in with this jackleg, spaceship mortgage, and I'm representing the seller, and I'm like, man, I don't like this at all. There's no buyer's agent who's going to say, hey, listen, Tim Murphy over here is the guy you want to talk to, because you're not even getting any access to any of these local mortgage programs. You're paying too much, this, that, and the other. That's going to be a problem too. And it's also going to affect mortgage lenders, because there's not going to be a buyer's agent to rep, like, sending deals to these local mortgage companies. I think it's going to push more people to these national companies, like the one Tim and I just had this conversation dealing with, is one of these national mortgage lenders, guys in like Cincinnati, and he's sitting there saying, oh, well, you need to make sure this, that, and the other, and like we're looking at each other going, no, that's dumb. It's not how it works. Like we're dealing with a well issue, and they don't understand how wells work. They feel like there's something's wrong when there's nothing wrong.
Can I add something to there, Brian? I'm going to throw something to you. So I think with the pandemic, I think with the current marketplace as far as the real estate community and the lending community, I think we're going to see a massive change in the lending side. I think you're going to see the banks are shrinking their footprints. The banks are pursuing more of just the conventional 30-year fixed rate, 20% down, great scores.
Which is bad for people. It's bad for people that need help. That maybe you have some credit challenges and you need somebody who's going to take the time to work with you for 6 months to help get your credit score fixed. That's going away. Yep. And they're not going to give you access to no money down, And then some of these local programs that are a super pain in the butt to deal with, by the way, as a mortgage lender. I used to be one. And it's like, well, we don't have, I'm so happy I don't have to offer that now. We're only going to deal with what they call A-paper buyers, doing conventional, everything's super easy. The process is like 4 times easier doing a conventional loan than somebody who's got challenging credit, who's getting a down payment assistance program. So they're moving towards an easier process that's more profitable, but it's going to hurt the consumer 100%.
No, see, I totally disagree with you on that one. I think what's going to happen is that conventional side is going to get so damn competitive that the banks are going to have to offer some great deals for folks that have great credit. I think that's going to be the easy part. Now, the other side of the coin, the lenders that are remaining in the marketplace are going to be drilled down. They're going to be refined. They're going to really know their product and know what's available and know how to help their consumer and their friends. Dude, that's what's going to happen. That means a lot of lenders are going to leave the industry, but those that know what the hell they're doing, they have the right tools in their toolkit, and that are focused or driven, listen, let's face it, Brian, right? If you're driven, you have the right attitude, right? And the right focus.
Yeah, I think Tim Murphy's going to be fine. I agree with that statement, but I will say that if you do away with buyer's agents, Tim, you are going to have a much harder time. When somebody decides to buy a home and they're sitting in, right next to your office in Waldorf, and they're not from here and they don't have a huge network of people that know Tim Murphy, they're going to go on Google and they're going to say like mortgage lender, and they're going to get stuck with Spaceship Mortgage. Or they're going to get stuck with Veterans Mortgage or whatever it is, and they're going to end up in a situation they're not going to have access to the loan programs you have access to. I think it's going to hurt the consumer in way more ways, and then everyone's sitting here going like with these like pitchforks saying realtors are making too much money, burn this whole thing down, like the whole thing's a scam. And they don't realize the downside to not having a good lender and a real estate agent team that sort of knows how to navigate challenges. Like, okay, well, a percentage of listings and settlements don't have challenges. That's true. We deal with good houses and good buyers and good lenders and everything's smooth, but there's a percentage, like 20% of deals are, depending on what price range you're in, where they're very challenging. And you got someone like Tim who's like a wizard who's like so capable of solving very challenging situations.
Right.
That is going to go away, and I think that in the end it's going to end up hurting the consumers.
So here's what my philosophy is, Brian. I don't think we're going to see a 50% reduction in buyer representation. I think we might see
it's going to be more than that.
20%. Nah, I don't. We're going to see it. I think people recognize.
I can back all this up, but
it's the largest financial investment you're ever going to make. And to me, if you're going to have such a huge investment, you're going to want a professional to stand by you. I think the way it's presented is going to be different, and perhaps the pay structure might be different. But I don't think it's going to go away, Brian.
We can have a conversation about it. I've done a ton of reading. The issue is that when the seller is prevented or dissuaded from paying the buyer,
right,
and it's put on the buyer on a percentage basis, it doesn't happen. Only 5% of buyers in other countries choose to pay for a real estate agent. So when given the option of going directly to the listing agent,
right,
they choose not to do it because they don't want to pay for it.
And yet we've been doing it since 1916.
Yeah. But they are doing a drain the swamp sort of mentality. Every article you read is like, we're going to finally get these dirty real estate agents who have been screwing us over out of all this money, and the 6% commissions are going to hell and blah, blah, blah. It's like, I understand there is some, feelings of, I went through a deal that was super easy and I felt like the money exchange was a lot. I get it. I would also say the reason why it was easy because you're dealing with professionals, but then there's times where you deal with a complete buffoon who actually screws the deal all up and you're paying them that amount of money.
Sure.
I see where there's challenges, but I also say that what's going to likely happen is they're going to diminish the buyer's agent representation. It will make it harder for everybody to do business. And it is what it is. I'm not going to sit here and try to change the world. I'm just telling you what I think.
Well, so with that being the case, Brian, so back to the story, it's going to make people more professional. Number one, you're going to have less issues. Number two, I think sellers
You'll have more issues,
Number three,
but more professional.
I think
You have way more
professional,
issues.
You're going to have issues resolved one way or another. It's going to go through. How many listing agents are not as professional either, Brian? I mean, think about it, right?
No, listing agents tend to be more professional because the way the real estate business works is you work your way from a buyer's agent to a listing agent. And listing agents tend to be more seasoned and to be more experienced and to have more ability to resolve issues and to be more professional. So I don't think the listing agents will cause the friction. I think the friction will be unrepresented buyers that have these very strong opinions about what they think that they're going to do and not do. And they have nobody telling them. I'm going to be calling Tim and saying, Tim, bro, get this buyer in line. And Tim's going to be like, listen, but that's if they get a hold of Tim, because like I said, if there's no buyer's agent involved, they probably aren't calling Tim unless Tim gets his like Google game going and he shows up on the local search results and he starts going directly to consumer. Because the way our business works now, Tim gets all of his business from real estate agents, not from people Googling mortgage lender in whatever White Plains.
I think what happens, the circle of cash flow, how we influence each other is going to change. I think lenders are going to be more involved with the listing side, number one. Okay. And then number two, I think buyers, consumers will be relying more on their, you ready for this one? On their recommendations by their financial planner, by their accountants, by their lawyers. I mean, you nail it down by the.
But buyers aren't going to be doing any of that, Tim. They're not going to be paying for the services of a realtor. Now there will probably have to be. The challenge is going to be, and we don't have time to get into this, but the challenge is going to be how showings take place, because we live in Southern Maryland, and my listings are 20 miles apart, 30 miles apart, 40 miles apart.
Sure.
And this is where again the level of service is going to hurt everyone. As a listing agent, our job is to get as many people in the front door as possible to buy your house.
Yep.
If you wipe out buyer's agents and now you're going to rely on me, who's 30 minutes away, to show every buyer the house, I'm going to scrutinize that situation. And some people say, well, I want to make sure only qualified buyers see my house. Well, sure, that's probably true. But let's say that they're like barely qualified, right, and that they're also just started the home sale process, and there's like no chance they're going to make a decision today. And they're just like, hey, I'm thinking about selling my house, but I want to go see this house. You think I'm going to get in my car and drive all the way out there for that guy? No.
I think you're going to use one of these, Brian. You're going to use the phone. Everything's going to be technology. But remember, the one thing I want to tell you, you're not going to take the relationship out of real estate, Brian. That's all there is to it.
On the listing side, yes. But on the buy side, as challenging as what we've just described, Tim, is how unaffordable houses are. If you think you're going to add 1 or 2% burden on the buyer to come out of pocket, not happening.
It's already being done. We just raised the price to accommodate it, dude. It's already done.
But that's built into the current system. They're saying with the new system, they want buyers to come out of pocket.
Right. And
not going to happen.
Going to expect to have the seller's going to say, "Hey, I'm only going to pay a 3% co-op." And guess what? They're not going to be able to get as much in the sale price of the house, because what's going to happen is we're going to ask the seller to pay the closing. We're going to ask the seller to pay the real estate commission. Brother, there's not that much.
They're not going to do it. You deal with for sale by owners, and you talk to them about paying the buyer's agent, and they are just like, no, they don't understand.
Unless they understand the value.
They don't.
When you can demonstrate the value to a for sale by owner, they want to bring in an agent involved in the process.
But that's my point. That will never happen. They're not going to call some buyer's agent and say, demonstrate your value. They're going to look at the situation and say, I need to buy this house. I only have $15,000 in the bank. Right. How am I going to buy it? They get a hold of Tim. Tim's like, well, you got to actually come up with 20 to cover your closing costs. We got to get the seller to give you 5. Sure. And do you want to pay a realtor on top of that? Like come up with another 10 or 20? No, I don't have any more money.
It's worth paying somebody to negotiate the sale, to get the max closing assistance, to get the best programs available. Sure. That's the value of a real estate agent, right?
I don't disagree with you, Tim. I actually would argue that this is going to ruin the the market in many ways is going to end up worse. I first of all would say that, but I'm also going to say that in reality, regardless of how I feel or what's right or wrong,
Right.
people are hell bent on blowing up this structure, and it's going to happen, and it is going to be tough for buyers and sellers and everybody to do business now. It will become harder, and it's okay. I'm a listing agent. I'm
Right.
looking forward to a great year next year, and if they do away with buyer's days, I'll deal with it. We'll figure something out. Tim's going to be fine. You know, we're going to be
No, dude.
fine.
I'm not going to be fine. I'm going to be phenomenal. You have to rephrase that, man. This is going to be a great year, Brian.
Yeah, I agree. Yep.
All right, man.
All right, Tim.
All right, brother.
Thank you for your wisdom, sir.
Always. Talk to you soon, man. Have a good one.